This is the Friday, December 23, 2022 version of Market Plus. This is the extra, the bonus, the additive, the gift to all. Jeff French with us again. Jeff, we had a little longer time in the markets there. Was there anything that you wanted to cover? I had fuel written down. You were telling me between shows it's a pretty good time to maybe make a purchase of one fuel in particular.
Well, I look at diesel, most days. I mean, weekly I track it for sure, but we're 20% off the summer highs. And you look at what this administration, the Biden administration, has announced. They've come out and said we're going to refill the SPR between $68 and $72 a barrel for the oil. And we got down to those levels here this week, but we quickly bounced off that. So it's kind of put a little bit of a put option, kind of a floor in this crude oil price until they buy, I think they have to buy 60 million barrels. So a pretty significant amount. So yeah, anytime you get this crude oil down to 70, 75, look to put some protection on. And obviously diesel price is 20% off the highs. I'm looking for either to buy the physical or put some call options up top.
Especially given what we've seen for prices for diesel here in the last several months.
Yes, and for producers, it's one of their biggest expense, and they go through a ton of it. So look at it, 20% off, this needs to be addressed.
Well, I wasn't going to spoil Brad, but he did it on Twitter. He said it publicly. He said he had some troubles in Nebraska blending fuels in one of the trucks and it gelled up on him. But Bradley was able to thumb out a question for you, Jeff, and he wants to know, have boxed beef and pork exports to Asia declined with the COVID lockdowns in China?
Yeah, I mean, really everything has slowed going to China, and not just U.S. products, but also South American products. But yeah, looking at beef and pork specifically, they are still buying, but yeah, the pork has definitely come down. But also, if you look at, like we said on the main show, I mean, hog prices in China have absolutely collapsed. It's one of their biggest decline here over the last 2 weeks that they've ever had. And, that was a result of them opening up. And, the producers rushed in, tried to sell their hogs, but the people actually didn't open up. The sickness is so bad. The policy might be they have opened up, but the demand and the normal consumption is definitely not there. So, yes, it has slowed. Does it come back? I think so, but we just have to work through some time here.
So how do we navigate China then, given that just in general, whether it's hogs or meal or soybeans or anything else that they're buying right now, we thought there would be this uncoiling of this spring that had been pushed down for a long time. Is that going to happen, and at what point in 23?
Well, if you break it down with the beans, I mean, it's estimated that they are 70% covered for their first quarter needs. So we'll have to see. I mean, our window for the bean exports it's closing fast. I mean, Brazil and South America, they're going to be ramping up here in the next 3, 4, 5 weeks, and everybody's going to be rolling down there. And they have a pretty darn good crop coming, maybe one of the best they've ever had. So, yes, the window is closing. You look at these prices, we went over it well. We are at the top that we've been at here in the last 6 months, very near to it. So, yeah, this is a time for action. If you don't want to sell the product, get some put protection or sell some futures, sell some calls, get something on in case the futures move down that you can still partake in that sell-off.
Well, let's talk about ratios then. Let's move into some other math. Robert in South Dakota wants to know, Jeff, please explain why a 2.4 to 1 ratio is a thing for corn and soybeans.
Well, it's a thing, historically, the bean to corn ratio is historically right around 2.5 to 1. And it's solely based on the price of the commodity. And, it helps some producers to determine which acre is going to be more profitable. Most guys, they stick to their rotation, but there are certain acres or certain regions that they look at this ratio. I mean, typically, the higher the ratio goes, that would favor more beans. And then the lower the ratio goes, we've seen it down to 2.1. Right now, new crop, 23 with corn at $6 and new crop beans at $13.90. It's 2.3 to 1. So that would, from a pure economical standpoint, favor more corn acres. So it's something that some guys look at it, not all of them, but it's something that comes into play.
Well, and we kind of danced a little bit around January's report that all of a sudden quickly turns to acres. I know that doesn't come out necessarily in January, but excuse me, are you hearing a 50-50? Are you hearing your own ratio mix, I guess?
Well, I mean, in our farm, I mean, we stick to pretty much the rotation. I mean, we might have a 40 or 50 acres that we, keep the same, but typically it's we're rotating corn and beans. And I think a lot of Iowa is that way. You get out to some other places, they might do more corn on corn. But yeah, I mean, we'll see. Now the January report, that's going to be mainly for the old crop, 22 corn and bean final numbers. And personally, my gut feeling is don't be surprised if they do ramp up yield, both corn and beans, nationally. Just kind of the feeling I'm getting. We'll have to see here in a couple weeks.
Even though they've maybe been knocking it down the last couple of reports, you're thinking it might go back up.
Yeah, I mean, from talking to producers and other analysts, finally seeing, what type of yields these guys were producing, it might inch up a little bit. Not too much,
okay,
but could be a little bit.
Let's talk about wheat. Eric in Ohio wants to know, Jeff, the wheat market has not responded overwhelmingly positive to the dry, cold weather in much of the Midwest, except until Wednesday. What factors are needed to get a larger bounce?
Well, I mean, number one, you need to shake these funds shorts. You need to shake them loose and start buying back their short positions. And is that going to be a geopolitical reason? Is that going to be weather somewhere out throughout the world? This week we had an Iraqi tender that actually Australia got. So it's not just us that we are really going down. It's also French Matif wheat. But, we have the U.S. dollar down here at 6-month lows. So we've had a big sell-off in the wheat. Personally, I think we're probably carving out a bottom here for a little bit at least. But yeah, I think there's going to be outside factors that really rally this wheat moving forward.
Outside factors. Okay. At the end of the television show, before we moved into Plus, I kind of asked you a larger question. Only 30 seconds. Give me your big global view. Let's do one more to close Market Plus. There's been a talk of higher priced oil in the future. What will lead to even better selling opportunities for the 23 crop? That's from Dennis in Iowa.
Higher prices for 23 corn and beans?
Yeah.
Oh, it's going to have to be, number one, weather driven. Obviously, we're a long way off. Here the next 3 months, it could be because of the Argentinian weather. I mean, there are dry places there. They do produce a lot of bean meal and a lot of corn, so look out for that. But for our crop, it's going to be weather driven or some type of geopolitical war, over in Ukraine, Russia. Doesn't look like that is going away anytime soon. So yeah, there's going to be opportunities. But again, we are coming into 2023 at very elevated prices. These are prices that you need to either look at booking some new crop or getting some downside protection in play here.
I guess I should have asked oil itself. We talked a little bit about ethanol, again, between the recording. Ethanol this week, the margins have been dropping. It's their lowest since April. Oil, ethanol, corn kind of all go together. And you talk about strategic reserves, stocking back up there. Does this story in energy play out in the first quarter of 23?
I think the demand side does. I mean, you want to talk about ethanol and their margins going in negative. I mean, look at gas prices. I mean, gas prices have come down drastically here in the last 6 weeks. And you talk about the margins in ethanol, that's what's really squeezing this basis out west. I mean, basis levels out west that were extremely hot, 30, 60, 90 days ago are actually moving lower, and they're moving lower while the corn market breaks 40 to 50 cents. So absolutely, I mean, the prices have moved lower here, but again, we're in a low demand time frame right now for gas consumption. Get through the first quarter, we should move higher here.
Supply and demand plays out all throughout the economy. Jeff French, thank you so much. Great to see you.
Thank you, Paul.
Merry Christmas to you.
Merry Christmas.
All right, that is going to do it for Market Plus here. Next week, we are going to look at the highs and lows of agriculture during 2022, and we'll have market analysis with Don Rose. Thank you so much for watching. Have a great week.